Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. We're going to take a look here at Bitcoin, just really quick here and understand kind of what's going on, best practice, big picture, and truly just try to get perspective on what's going to be the next move here. And it can be difficult to gauge, but the overall trend is going down. Now, if you're new to the channel, not a financial advisor, love teaching people how to trade. If you want to become a better trader, CryptoCache.tech is a site. Link in the description below. I do offer discounts for military and, of course, third world countries, so feel free to message me if that fits your quality of life. Now, that being said, taking a look here at Bitcoin, big picture, 50-day simple moving average, once again, is still trending above the price action. So it's right around 42,000 as expected, and it's going to probably continue to maintain there or potentially even drop down lower as the price continues progressing sideways or down. But we are in this descending trend, of course, and that we need to understand that this trend essentially is not our friend, okay? And until it breaks back above, we're not in really good shape here, okay? So again, I kind of have like a loose drawing here essentially for the trend line. I could draw it a little tighter, but generally speaking, there's no reason to go with that because of the fact that it'll give us kind of false positives in a sense. Whereas if you have it a little bit more open here in this case, it's going to help you kind of get more perspective on the fact that we have some key level resistances to get through before we've broken this trend officially. So a break above this little trend line is one thing, but a close above specific key level resistances is another, and we're not even close to that point yet. 40,000 is the first starting point we'd want to break so we can establish a higher high, and we aren't quite there yet. Obviously, yesterday it did try. We tested 39,200, got rejected. That was a previous support level, now a resistance. So at this point, 40,000 would be the first major catalyst to kind of just, if we're to close above 42,000, have a chance of continuing on higher to break 42. But 40,000, I would say, is kind of a good starting point there. But by no means do we hit 40,000 and it's all well and good. Okay, so just bear that in mind. We're not quite there yet. All right, so that's kind of where we're at there. Let's go and look at standard stuff. RSI obviously overextended, or not necessarily overextended, but still bearish, if you will. And obviously telling us that, hey, we're on the wrong side of the tracks. We will be continuously until we break back up above. So until we get over 50 in the RSI and or 50 on the simple moving average, those are cases in point where we're not really going to see a turnaround until that happens. Okay, a good close above 42,000 is what we truly do need, and that's just a starting point. There's a lot of other things we need to take care of too, but 42 is definitely a point of contention. And what I'll do too as well moving forward, I'm researching some other indicators for larger time frames, making sure that we find a good macro understanding of things by looking at the 1 month, maybe the 5-day and the weekly, just to ensure we get big picture best practice in that regard. So I'll be rolling out with that here soon. Just keep that in mind. But for now, when it comes to the 4-hour, we can see this being a transitionary time frame, we're getting rejected by the 50-day SMA as well. Okay, so it's pretty consistent there. If the price were to break above that, that could be a good starting point, because right now we're under 4 different moving averages, and that's not necessarily a good thing. Okay, it'll continue to maintain this lower trajectory until obviously we break through one of those resistances. But you can see 50 on the RSI is working as a point of contention as well, essentially holding the price action in place. Yesterday it was testing it and just barely broke above, but it got rejected out by that 50 and is still working its way down. We also got the MACD diverging here, so to speak, kind of telling us there's a shift in momentum. That's no guarantee, of course, when you see a convergence or divergence, but it does increase the odds of the direction continuing in that direction, if that makes sense. In other words, with this 12 intersecting with a 26 in a downward fashion, that's essentially telling us that we're losing that bullish momentum and that the bears are likely to take control of this next trading session, which could last anywhere between 9 to 18 hours. It just really depends. But generally speaking, that's where we're at in the 4-hour there. Really disadvantageous. It's pretty much been like that for a little while now, but generally speaking, the 4-hour doesn't tell us that we have like this anything positive moving forward. We're still establishing lower lows and lower highs. Okay? So lower lows and lower highs. And until that trend breaks, we're going to continue to maintain a lower price point and possibly even trend even lower. So generally speaking, that's kind of what we're looking at here for Bitcoin. Let's take one last look here, of course, at Ichimoku Cloud. We can see we did break above yesterday, and I think that we did have a concurrent MACD convergence, but again, the strength of the market isn't there. We also have low volume compared to previous days. That is also a factor of kind of telling us there's less activity. And with low activity, the volatility is always out of whack, especially with the altcoins. So I'd recommend being very cautious and careful with your altcoins right now. They are extremely volatile, I guess the best way to describe it. They're sharp up and sharp down, and it can be difficult to trade in this choppy market. So again, dollar cost average is always the preferred method. I'm rolling out with some dollar cost average trading techniques, if you will, in my trading academy. So check that out, of course, to my current community members. I'll be rolling out with that this month here, working on that just to ensure we can kind of understand big picture and help us invest more effectively. Because once again, trading is one thing. Trading should lead to investing, but you shouldn't just trade your life away. You should trade in order to survive later, of course, with a nice, clean, healthy retirement. And that's what our HODL portfolio is all about, and that's what dollar cost averaging truly represents, is getting us a lower average in these kind of climates. Okay. Again, there's a lot of different things that I'll cover in that sense, but generally speaking, that's the concept. I recommend sticking to that for the moment because dollar cost averaging will eventually help you out. But for now, don't put all your eggs into one basket. Just keep adding to your position slowly as the price goes down. It's a better buying opportunity. It's kind of like a continued sale, and it's not the worst thing in the world because the market will recover. But we're in this weird world right now, and things are gonna be a little strange for a little while. So just be prepared and ready for that. But nonetheless, Bitcoin is looking fair to middling at best at this point. I would anticipate the price going down before it comes up. But we might see a retest of 40,000. If we do, that'd be great. Clean close above that would be a starting point for higher highs and potentially an opportunity to make higher lows. We will see once we get there. All right, well, I hope you found benefit, learned something here today. Thank you so much. If you did, comment below. If you want to become a better trader, CryptoCache.tech is the site. Link in the description below. And I do look forward to working with you. Hope you have a great rest of your day. Thank you.